Hi, everyone. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. This session of our Green Energy Conference will feature Copper Bank Resources. From the company, we have with us Johnny Kovacevic, CEO and Director. I'll note that if attendees have questions throughout the presentation, just to type it in through the event application, and we'll get to them at the end of the session. The corporate presentation is also available on the conference website. And with that, I'll turn it right over to Johnny to guide us through this story.
Thank you, Taylor. And I'll be going through the Copper Bank strategy and how we aim to deliver value the next month, next quarter, next 6 months, 12 months, 18 months. Listed on the CSE and a forward-looking statement for many of the things that I'll be saying throughout this presentation. It should be used in the context of every graphic within. Our share price over the past year, currently trading at 40 cents, and our market cap is $32 million. So that's the baseline. And I would like to present a case where, depending on the execution of the strategy, our various projects, how can we have disproportionate performance to the market and copper prices. We have not issued warrants throughout the entirety of the commodity bear market, so we do not have any warrant overhang, if you will. And if I advance this slide forward, you can see that about 40% of the stock is held by very few people and a very large retail following. And our strategy is really quite simple. We have the ability to hold the business or move it forward with very limited dilution. We have 100% ownership of all of our assets, and there's no joint venture earning, no debt. We can also significantly unlock value for a very limited and stepped and gradual allocation of capital to achieve the next series of unanswered questions. But this is unique because this is a few $1 million, not tens of millions of dollars, at least not for the next few phases. And we do manage this business as owner operators. We have had intensive insider buying consistently throughout the foundation of Copper Bank. And now I'm going to walk you through where we feel we're in the space and how we aim to spend these few $1 million to unlock what we think are significant quantum leaps in valuation for Copper Bank and Copper Bank shareholders. So we offer investors, commodity optionality. We have historical economic studies that gives you the net present value, and of course the foundation of a very large resource base on multiple projects, land optionality, and of course execution optionality. So how we spend these dollars, and we've very carefully measured over the past really in a heightened way over the past few months, but really over the past few years on when we had a normalized copper pricing environment, when our cost of capital would decrease, how do we allocate that capital to have a, really multiple reasons to have this unlocking of value. Currently trading at just under 1/2 of 1 penny per established pound in the ground. I will be going through the resource tables. They are historic in nature. We do not consider them to be temporary or contemporary, but they were done to a 43-101 standard. And of course, that should be used as a caveat within this slide. We also feel that in the execution of our plan, there is a plausible reason, a rationale that we can increase resources significantly with the allocation of this capital. So where does Copper Creek particularly fit in what's being built now and what's going to be built? And I use this graphic because these are the sort of 21 or 22 projects currently being built by the major mining companies. And the common theme here, of course, is Peru and Chile. And if I fast forward to the projects really for the future, these are the ones that are approved and being built, but the ones that are yet to be approved and financed, you can see a common thread once again. It's location. You find Chile and Peru at the fringe. You've got some of the STAN countries and some periphery areas. But we would think that when you look at the future election or election, uncertainties, tax rates, readily available workforce, and all the other important issues which are coming to the fore, we seem to feel that a lot of these things are pointing to the United States as a #1 jurisdiction. Of course, I'm talking about Arizona and Nevada, where our projects are located. And what should also not be forgotten is some of the negative headlines that we've seen happen with projects actually losing their tenements. All these things put together when you look at the United States, it also has the lowest tax rate in the world, 21% currently corporate tax rate, perhaps going slightly higher, but much lower than every other jurisdiction you're looking at. So the way the winds are blowing, we think there's a propensity for larger companies to really want US-based projects. Arizona and Nevada are consistently one and two jurisdiction in the world. I don't think I have to do too much promotion there. And that's where our projects are located. They're also located in very, very mining friendly counties within these states. Elko County in Nevada, we're talking about Contact Copper, and Pinal County, which is in the famous copper corridor of Arizona. I'm going to start with talk about Copper Creek first. That's where more of our recent press releases have come from. And highlights of the project, about $85 million has been spent on this project, very well advanced, and it's located in the copper corridor, where what you're looking at here are the largest operating mines in the United States. This was in fact the largest production area of copper in the world until Chile surpassed it. So everyone goes home at the end of the day. All of the obvious attributes required to develop and build and operate a copper mining complex are already here in a very low tax rate environment. And with respect to Copper Creek, it's also very geologically endowed. The two major trends occur exactly at Copper Creek. And the historical resource, which I talked about in the beginning, is 500 million tons of measured and indicated at 0.44% copper, with augmented by 480 million tons of inferred. And the drill program that I'm going to showcase for you today, we feel that success would be measured by having at least the plausibility to increase this resource by about 50%. This project, or this historical resource, is open in every direction, including depth. So when you look at the 7 or 8 largest operating mines in Arizona, the grade is very good at Copper Creek, 0.44, and the contained metal, which obviously some success of the drill bit and an update of the resource estimate, the contained metal would also increase. But it already is a large project. Some success with execution and on the drill bit, it really could put Copper Creek into what would be one of the, really a top 10 development project in the world. And I think this, when you put all that in context with what's going on in the world of copper and everything else I just talked about, we think all of those trade winds are pushing favorably for Copper Creek. It's a 42 square kilometer concession. The areas in purple are private property. And if you look at the pink arrow, it's pointing to the historical resource projected to surface. The green outline would be a pit outline from the 2012 resource estimate completed by IMC. And the green arrow is pointing to the northern area, which we call the dry camp area. And that is a greenfields exploration opportunity. We're looking at various different initiatives to move that forward, separate to the work I'm going to talk about now. But this is what we'd like to consider a 2-project company. We got the established resource, historical resource in the lower area, and the greenfields opportunity to the north. So this is a 3-phase drill program that has been very carefully measured by our consulting geologist, Mark Pfau. We have another site visit starting on Monday where we're going to make the final calibrations and very carefully measuring what to do. And the objective here is to grow near surface resources. All of the phase 1 and 2 programs are off of private property. So really it's an execution, and that could start effective immediately. And that is 6,000 meters, followed up by 6,000 meters in a 3rd phase, which will occur off of our BLM claims, which is about 8,000 meters. So a total of 20,000 meters. There are some 12 drill holes that are completed that were done after the last resource estimate. So it would be putting in about 40 or 42 drill holes and then a resource estimate update early next year. This is looking at the drill plan. And you can see the breccias. There are over 400 that have been mapped on the property, and only about 40 have been drill tested to date. So this is using a 0.4 copper equivalent cutoff in the block model. So it's just to highlight that we are looking to grow resource laterally outside of the historical resource area. If I was to do a cross section, you can see once again the phase 1, 2, and 3 in the various colors, and everything is designed at about a 45 or 50 degree angle. All historic drilling almost predominantly with a vertical orientation. And of course, you can see that success here would lend itself to for us being able to increase the resource size. So in summary, at Copper Creek, it's an opportunity to cost effectively grow it into a truly a world-class copper porphyry, starting with that historical all category base of 980 million tons in measured, indicated, and inferred. Optimal location in the copper corridor lends itself to very obvious advantages sought after by all the major mining companies, including the lower tax rate. And we can execute a phased, low-cost drilling program. So it's unique to be able to spend this few $1 million to unlock something that would be within the largest of the porphyries anywhere in the world, of course, being in this optimal location. And cost to drill here is about $300 a meter. So everything I talked about, 6,000 meters for phase one, times $300 a meter is about $1.8 million. So we think that's pretty good bang for the buck for this project. Project number 2 is Copper Creek, which has an adjacent exploration project. So you can see the PFS area here, 86,000 meters has been drilled. 2013 PFS release in September. Very good economics. They used the $3.20 copper price, and that gave the project an after-tax IRR of 26%. So if we look at the project in the $4 copper price environment, we think this very strong economics for this project. We would like to see the project grow, and that'll all be done through further exploration here in Copper Ridge, and I'll show you some maps on that. It's a 6,000 acre concession. Everything in blue is private property, and the gold areas are BLM claims, and the future drilling would occur here in this Copper Ridge area. More detailed map. One question that always comes up in perspective, Copper Ridge, why was it never drilled? It was never owned by the previous operator, Inexco International, until a land deal they did with Allied Nevada in September of 2011. So the field in the summer of 2012 yielded these results: 1 to 12% copper at surface, about southwest to all of the drill traces in the project. So success here would afford us with to grow resources and potentially find a higher grade starter pit within the Copper Ridge area. Most importantly, this is shallow drilling, RC, 100 meters deep. So for about $1 million, we can really get a significant amount of reconnaissance exploration drilling, multi-phase exploration drilling in Copper Ridge. And with these kind of historical results, we think it would be a pretty exciting near-term strategy for our shareholders. These are highlights of the 2013 PFS. And you can see every 15 cents that the copper price goes higher, you can see in the NPV by about $25 million. Optimism of this PFS would be about $400,000. And we would consider the rationale to do that is that we feel there's an opportunity to get a 15 to 25% bump in the net present value of the project. And then using the after-tax rate, before it was run at 35%, we would now run it at 21%. And of course, the optimization. But around $4 copper, you have a scenario where the net present value is 2x the CapEx. So very, very strong economics, even around the $3.50 copper price. The project is well in excess of 30% IRR after tax. It is a leach copper project. You can see the grades here. So with today's copper prices, those blocks are all worth $20 or more. And mining and processing here is about $6 pay back the CapEx, so less than $10. So for every dollar you put in, you get $2 back. And I think the stronger for longer copper price and thesis bodes well for this project. And more importantly, with its location, a scarcity of these leach copper projects on a global basis, and the ability that as shown in that area in Copper Ridge, any success there, making this a longer mine life project certainly would make it more interesting for larger companies. So in summary, it's an opportunity for a really small amount of capital. We're talking $400,000 to do this optimization of the PFS. The enhanced metallurgical work, the project has good metallurgical results. 4 studies have been done to date. We think if we can reinforce that and give confidence to the market that those numbers stick together, there should and would be a premium for a project like this because of its location and strong metallurgical characteristics. and of course the ability to go and do more reconnaissance drilling in the Copper Ridge area. But everything I talked about is actually significantly less than $2 million. So not a lot of capital to answer a lot of important questions. Got a deep technical team, over 300 years of experience. What you can glean out of here, there's no real burn rate associated with this team. The only person drawing a salary is myself, and then our consulting geologist, Mark Fau, is on a day rate as he's helped us come to this point with the drill plan, the multi-phase drill plan at Copper Creek. So in summary, we're offering retail investors and institutional investors the commodity optionality, the land optionality, which really cannot be, I cannot underline that enough, because it's very, very difficult to acquire projects such as these, and the amount of capital that's went into this portfolio would take well in excess of $120 million to duplicate what's occurred so far. And our market cap is 32 million. So we certainly think that there is, our efforts should be rewarded if in this stronger for longer copper pricing environment. So that leaves us, I believe, 4 or 5 minutes for questions. That's our graphic. And if there's anything you want to field to me, please share it now.
Great, thanks a lot, Gianni. That was a fantastic presentation. So I'll open it up to questions now. Just a reminder to any viewers that you can submit them through the event application. To start off, first question here, how are you maximizing the meters planned at Copper Creek? I know you're still kind of finalizing the targets and whatnot, but are you planning to do any kind of deeper holes or do you have an idea on that yet?
We're not going to do any deep drilling unless we have mineralization. These are 500-meter holes. The true depth will be 300 meters or thereabouts, because they're going to be drilled at a 45 or 50-degree angle. And I say this in almost every presentation, it's a carpenter's mentality. Measure 7 times, cut once. We have taken a lot of care there. This is a data-rich project. And when they were drilling vertically into these breccias, there are areas we get no resource credit between clusters of drilling. And when you put that into the mag high and low, and where resources have already been delineated with various structures, and then the breccias, we feel that these drill holes all have a very, very strong probability to assist us in this razor sharp focus to increase near surface resources. And this is important because albeit majors will tolerate a 4-to-1 strip ratio if a project has many positive attributes, which means they'll take that over a project maybe at high elevation with no infrastructure. But if you can get the strip ratio into that 2.5 to 1 or 2 to 1 or 2.5 or 3 to 1, it makes the project a little more secure. And that's our focus. We want to find near surface resource. And we're not less interested in drilling deeper than sort of 300 or 400 meters true depth, unless we're in mineralization. We will let the drill spin.
Right. Okay. Great. And then turning to contact, is the focus there going to be, more getting towards an updated kind of technical report or resource, or is it more focus on the exploration upside at the adjacent Copper Ridge?
It's a multi-pillar strategy at Contact. First of all, the project is very rare because there are not a lot of very well advanced leach copper projects. And this project has the ability to grow. I think that doesn't take a lot of imagination to see how allocating some capital and drilling to the Copper Ridge area, any success there immediately makes the project bigger and a Pandora's box. At the same time, we have this historical economic study, and there are many areas where the optimization can occur. This has already been looked at. We've already done these estimations. The tabletop work can occur, and this has already occurred, but actually executing on that and to have a more recent engineer stamp on it, this is going to be about $400,000. Now, because we've looked at it and we have a high level of confidence that it makes sense, the anticipated result will be a 15 to 25% bump in the net present value before even talking about lowering the tax rate. So we think that in parallel with growing resources. And then the third pillar there, of course, is to reinforce what are already very strong metallurgical results. To recap, 76% recoveries, very low acid consumption, about 8 kilograms. The kinetics are very strong with the project on the leach time rates and recoveries. So people are always skeptical of these characteristics. So I think if we were to do those studies, we're doing it not to make the project more of a risk. We're doing it because we believe that will actually showcase the project well. And there should be, in our view, a premium on cathode copper type production in the United States in a county like Elko, where if the historical averages were between 3 and 10 cents per established pound in the ground, you can look at all of those historical transactions. Which projects often received those premiums? They were oxide copper projects. So you're not talking about 2 or 3 cents per established pound. Yes, there's less copper associated with a copper leach project, but if you can get 10 or 15 cents per established, or even call it a reserve pound, this is an exercise worth doing. And that makes that project, looking at historical averages, worth a lot more than today. Or I use another example.
We're gonna have to leave it there, Gianni. We're right out of time. We're actually over time a little bit.
Okay.
But I would like to thank you very much for presenting Copper Bank to us this morning here.